Hello everyone, today is April 10th, 2022. I am working at the home office catching up on a little paperwork on this beautiful Sunday. I wanted to do a couple videos in regards to this increased mortgage pricing environment we find ourselves in. This is going to be the purchase video, and I'm going to do a second one for refinance people. The good news is it's not the end of the world. Mortgage Armageddon is not happening. We're not looking at some mortgage and housing crisis. Rates are actually not, or rate pricing, I should say, is not actually surging up. What's happening is that this artificial low environment that we've been in for 2 years, it's over, and rate pricing is just going back to normal, where it would have been were we not in that artificial low we've experienced for the past almost 2 years while we were going through this mess in our nation here. So it's okay for you to continue looking for that new dream home of yours if your real estate agent or broker can find you a great price on a home. Don't let the interest rate pricing stop you. So let's go ahead and go over to the computer, and I'm going to show you some good news. All right, so we're here now on my website, United Real Estate Capital's website, and we're on the calculators page. So I'm going to click on this mortgage calculator for purchases. So let's put in here a $650,000 loan amount, and let's put 20% down. All right, and let's put in a 4.125 interest rate. All right, you're going to notice you're seeing this payment 3270.18. This is based on the principal and interest payment of 2520. These are just estimated taxes and estimated insurance. Ultimately, your insurance is going to be based on what your insurance agent charges you, what company you're going through. The taxes might be close to this, but again, it's ultimately going to depend on what the county taxes are, but this is a pretty close estimate here. I'll click on this overview format. Maybe it's a little easier to read. So you see the mortgage payment, 25/20/18, and then insurance and taxes. We're going to focus on the mortgage payment here, okay? All right, so I just did this based on a 4.125 interest rate. Now let's go back. We're going to go in the Wayback Machine. Actually, it's just a year back, 2.875. So about this time last year, you could have got 2.875 with little or no cost at all on a loan of this size. So look at the payment here, 2157.44, 2157.44 versus 4.125, 2520. In fact, why don't we, I know you can probably do it in your head, but why don't we break out the calculator here? Let's see what's going on calculator style. All right, so let's take 25/20/18. Okay, as you can see, that's the payment for 4.125, and let's put that aside and let's put back in the 2.875%. So that's 2157.44. So let's put in minus 2157.44 and equals $362.74. So 360 bucks, that's the difference between the 4.125 payment and the 2.875 payment. So I got to tell you straight up like this. If you're purchasing a $650,000 residence and $360 is the difference between you being able to afford the home and you being broke, you shouldn't be buying a $650,000 house. All right, I don't mean to sound like a prick, but honestly, what I'm saying, it's the truth. $360, that's what one car automobile unexpected automobile repair, or something, anything, some medication that's not covered by insurance, whatever it is, you're one small emergency away from not being able to afford your house payment that month. And the point I'm trying to make with this is that the interest rate pricing really doesn't affect affordability a whole lot. Of course, you hear that on the news and some other talking heads, people mentioning that, but they're not people like me with 24 years of straight mortgage experience divided between the banks, the lenders, and the brokerages. And so they don't really see this going on. So no, it's not really the interest rates affecting affordability as much as the house prices are. Now, if you were to increase the price of the house, let's say you go up to $800,000 on here. Now look at the payment at 4.125 on $800,000. Let's obviously you can do that in your head yourself. Look at 3101 versus with $650,000, 2520. Big difference in the payment, a lot bigger than the difference with the interest rate. The interest rate is more like crappy icing on the cake. This gives you the largest increase, and then the interest rate just makes it that much higher, $300 and something higher, in fact, in this scenario. So it's the house prices. That's why if your agent can get you a great deal on the house, don't let the interest rate stop you. Grab that sucker, All right, so let me get into showing you something else really quick here. You see all this mess right here? This is how it looks behind the scenes when we're pulling up interest rate pricing for you. So when folks call in and they're asking, well, what is your rate? That's what people typically ask. In reality, this is how it looks behind the scenes. And they have to maybe select one of these that they feel might work best for you, or they just show you the rate that the lender is advertising. But this is how it looks. 2.875 actually still exists. It's just really expensive. That's why lenders don't show it anymore. Same thing with the 3% rate and the 3.125% rate and 3.25% rate. These rates still exist. They just get so expensive, the lenders don't advertise them. So on the surface, to you consumers and homeowners, it looks like interest rates are going up. But what's actually happening is that the interest rates that the various banks and lenders and brokerages are advertising is going up. But everybody refers to it as rates going up. So I'll do that also just to kind of keep you in sync with me. But what's really happening, the prices are going up. Let me jump to another slide here and show you. Now, these are actual rates that I advertised last week on the 6th. And you can see here, I show these range of rates, a little bit different from other places. Other places only show one rate typically. I like to show a range of rates to keep you in the mindset, or get you in the mindset that you have options. And one or two of these rates are going to work better than the others. And what I mean by better at saving you more money. More options helps you fine-tune something that's going to work best for your situation. That's why I list multiple rates. It's also easier to track where pricing is going, which I will address that in a different email, or different video. Sorry. Let me show you something here though, real quick. All right, this is a Quicken. Quicken is showing 30-year fixed at 4.99 with a 526 APR. Anyway, they're showing one 30-year fixed rate, 4.99. Now let me go back, and I have 4.99. Now let's go back to another lender, owning here. They're showing a 30-year fixed rate at 4.125. And let's go back to mine. Well, looky, I also have a 4.125. And let's do this one more time. Let's go to good old Wells Fargo. Their conforming rate, they're showing a 4.75. Oh, again, just one rate for each of the programs they have. So for the conforming, they're showing 4.75. And well, you guessed it, I have 4.75. The point I'm trying to make is that we all have the same interest rates. Every bank, every brokerage, every lender, every credit union, we all have these same rates. The lenders can advertise whichever rate they choose to advertise. What you're really shopping for are the fees. So you can still get lower rates. You just pay more for it, but you get lower rates. And don't get afraid of fees. Fees are not a horrible thing, and in most cases will save you a lot of money. All depends on how long you're living in the house. Let me show you one more example, or this example of what I'm talking about. Let's bring over the handy dandy calculator one more time, because we're going to compare a 3.75 rate, which costs a lot more than 4.75 rate here. 4.75 pretty much cost almost nothing, but you have a lot more fees at 3.75. But let's go ahead and pull up the calculator, show you one more thing on here. All right, so I'm going to take, let's erase this stuff here. Let's take 4.75. Oh, you can do this in your head, but I'm just going to do it for visual effect here. Minus 3.750. And I hit equals, and you know already that's going to be 1%. So in other words, there's a 1% difference between 4.75 and 3.75. So let's take that 1% difference and multiply it by 650,000. So 650,000, again, you can probably do this in your head, but I'm going to do it for a visual effect, times 1% equals $6,500. So what that is showing you is that in a year, 4.75 and 3.75 difference is 1%. So the 3.75 saves $6,500 per year more. It slightly changes each year, but roughly about $6,500 a year more than 4.75. So even if the closing fees were $10,000 at 3.75, you're talking in 2 years, not only have you broke even, in other words, the savings have paid for the fees, you're actually ahead, because in 2 years, this one saves $13,000 compared to this one. So don't be afraid of fees. And in closing, I want to show you one more thing on fees, just to keep you keep you on track in the right direction. Let's go back to the web. And one more thing here. Loan originator compensation rule. Type this into the browser, your own browser, and check it out when you get a couple minutes time. The loan originator compensation rule was enacted by the Consumer Financial Protection Bureau back in 2013, and it is federal. It impacts every broker, every bank, every lender, every credit union. Let's go on here. And this is about the fees. Let me find it. Where is it here? We are not allowed to be paid on certain terms of the loan, like the interest rate. So check this one out right here. You can go on, read in detail yourself, but I'll show you this one part. This means, for example, that a mortgage broker employee cannot receive compensation based on the interest rate. That applies to me too. Even though I own United Real Estate Capital, I make the same no matter which interest rate you choose. So try not to get wrapped around those fees. We don't care what you pay in fees from a profit standpoint. We only care from a standpoint of we want to get you into the rate that's going to save you the most money. But from a profit standpoint, we don't give a monkey's hairy booty. Okay, so don't worry about the lender getting over on you. It's about how much you can save, and you can save a lot in most cases, or more I should say, if you pay something in fees. So don't let the fees scare you. All right, well, I'd like to thank you for watching this. I hope this helped you, and I hope you stay motivated and keep shopping with your agent. Get that beautiful home you want to get. Come back and visit. I'm going to do also a refinance video on this same topic. But again, thanks for watching this video. Please visit us at urecapital.com or unitedrealestatecapital.com. Sorry, and if you're watching this on the weekend, enjoy the rest of this beautiful weekend, and have a great week next week.